Crypto Sniper, and we're asking the question, who's generally more accurate, the shorts or the longs? So I have a trader-based bias straight away as soon as I come in here, so I have to acknowledge it, make myself aware of it, and seek to neutralize it. My suspicion in the crypto markets on BTC, because this is all about a study about the crypto environment and specifically BTCUSD, is that most non-traders and general crypto asset class investors don't generally short, don't know how, and are emotionally heavily belief system committed to the long only argument, and that all bear cycles should be sat through. So my assumption is the inherent suspicion that those that are more trader and method-based variety will occasionally take shorts and are probably more experienced in moving in and out of asset classes and waiting. So with that known, I want to make sure I don't do a disservice to the longs and must actively counter that bias. Let's have a look. So the orange line is in fact the crypto price of BTC against the USD. It gets merges a bit close with the longs. The longs I've put in the red line, so unfortunately I'd like to have had them both as candles. I put up the shorts first just to check where the shorts were on BTCUSD. And what I found was that by the time you add another comparison chart, you can't have it in open and close. If you know that I am incorrect in my statement, please wise me up and leave a comment in the section, but I've clicked on the properties and I just don't seem to be able to make that adjustment. So the light orange is BTC USD, the red is the longs, the increase in people going net long, potentially even with margin, and the shorts also, they would be utilizing a margin account to do that, even if they're not leveraging. Let's have a look. Let's have a look for the history that we have some form of data for. I didn't get too much history on that, so it started on September. So upfront disclosure, small sample of information, so anything you assume for today as a result of this discussion can only be taken as moderately significant. This is not a full data sample. So what I'm going to do is I'm going to try see if there's some way I can zoom in a little bit. I want to see how the shorts went. So the shorts started, this is shorts relative high there. They were very low on the high. Then they started climbing in as Bitcoin turned down. But I think this is all a bit tight to make clear messages from it, and it was all a very, very strong bull market. Generally, the shorts were very low in number. In fact, leverage longs exceeded them. I am assuming the minus is saying that there was a far higher preponderance of leveraged longs, and that minus, actually, if you're a minus, that means that there were very, very few relative to the leverage longs. So I'm going to have a look specifically to the peak high. I'm going to reduce the data set even more just so that we can get some element of post melt up, so get a little bit of what went on. So the longs were quite high, the leverage longs peaked very close to the all-time high, and in fact the longs started to drop away with the price. They then bought the dips, which were the fake rallies, and they bought all the way down. So this descending structure all the way here that eventually had a capitulation out the low, this was being supported by these longs that eventually went crazy buying when they got the first beginning move up. As Bitcoin moved up, they dissipated slightly, then they came back for the second high, and then they continued to get really high as part of the next down. In other words, they were convinced this was the new bull, and they kept buying it when it went down. Finally, they capitulated very close to the lows after Bitcoin had dropped throughout this period. They pumped again on that small move, and then the new low were at all-time highs, and then they started to reduce, and ironically Bitcoin was drifting up. Then we got close to the secondary high that's followed that first rally high, and they got to a certain level that was fairly high and strong, and then they've been flatlining at those moderately high levels historically, longs, and they are currently pumping on this very low volatility rally. That is the history in a nutshell of the longs for the bear market, the melt up, and the bear market as a review. Now have a look at how the shorts did. They were getting killed, those little that were shorting. What then turned, they found out the market can be inverted commas wrong far longer than they can hope to be short and right. The shorts were actually dropping throughout, so they were late to the bear market. They jumped at this level. So they started getting in at this price point, which is interesting because I think that's going to be around about our 11,900, 11,800. So they missed the first $9,000. So they were far from early. And then they benefited from this big capitulation. And then after that quite high level of capitulation, they fell away quite strongly and left the low B. So they were actually quite low then. Then on the rally, they started climbing again. The first high and second high, first high, second high. They were still moderate and well below the longs. They peaked here, which is a little bit late from that high coming down. And then they went absolutely crazy short at the low one, what I call the low 2. And then the market started moving against them, and they got properly spanked in terms of numbers. They decided to get out of Dodge. They were at an all-time extreme high and actually ahead of the longs in percentage. I'm not clear on how this measurement is made, but generally the leverage longs have been all-time higher. So this shows it's a hodl market, not a trader's market generally, and that the traders are far less relative to those that are crypto asset class weighted for the long hold investors. As the long started to dissipate, so too did the short. So the general level of trading was dropping. I'm seeing this basing out now and very low volatility, very clear rounded bottom. So when we last were quite low vol and a little bit rounded, we got a bit of a pump there. That was a drift down. We haven't really had this rounded bottom structure. The longs have actually been increasing their distance. I wouldn't mind to have seen a difference between the two. This was when it was actually zero and actually crossed for a short while, and that was a clear signal potentially that Bitcoin was going to rally. Extreme high shorts and longs falling away really high, people getting too much stacked on one side of the ship, and the ship was going to tip to one side, and it did rally, but it hasn't been super strong. Since these highs, the longs have been building and galvanizing. So the longs have largely shaken off this return move back down here. Shorts dissipated for a while, come back to pretty moderate levels from what was an extreme high, moderate to mid-range, and are slowly building again. So people are starting to have the confidence that this may not be the return rally, yet longs themselves are increasing in confidence as well, which fascinates me because they're both engaging more in the market. Now, we have had periods where they've both grown here, although the longs dipped first before growing and the shorts spiked first before receding, so it wasn't perfect. This was another period where the shorts gained and the longs also gained. In the end, the shorts were accurate and the more accurate party, and the longs adjusted and got out very close to the lows. So what do we make of this? I'm not sure there's a clear-cut winner. I still think the short traders have generally been slightly more accurate. The longs are often getting out close to the lows, as they did here, very close to the lows, and continuing to get strong and shaking off rallies where potentially that risk has increased. The shorts look like they're building. The shorts look like they're building, and last time they built and moved, we did have a big sell-off in value. So that double top there round about here. Throughout that sell-off period down to here, the shorts were increasing. They were a little late though at their all-time high, and they missed the low. So the early shorts were getting good trades. The early shorts were getting good trades well into that. By the time it went to new highs, it was becoming a late trend trade. And then there was a brutal adjustment for those that were arriving late. Are we seeing the beginning of early build-up of shorts and the usual hodl-only enthusiasm of longs, if providing it's not falling dramatically, they accumulate? I don't know. What do you think? That's my take on the final days of the melt-up and the bear market so far on BTC longs and shorts. I would say this, in my view, and it's not far from a high probability assessment. It's just a assessment where I'm continuing to test and analyze directionally what I think will happen. I would say the early shorts, where there's about to be an early move, have generally been quite well informed. So this increase here into that high and the increase into that high ended up seeing a reasonable move. The late shorts got killed, and the longs for me, I can't really make rhyme or reason of it, and I think it's a pain contest. They get out in great numbers after climbing regardless of what the price is doing, gaining, doubling down on the fall till eventually it gets they run out of gas and they suddenly adjust down, and minor moves see big swings back in. And ironically, the extremity low of this recent period actually came quite near high, and they started building again their longs just as we were topping out and selling off. So I do think the longs are quite a contraindicator generally. Okay, that's my take. Give me yours.